Very good afternoon friends. GSTR 99C filing period is again here and you need to take cognizance of the major changes in the GSTR 99C for financial year 23-24 while filing the 99C this time, because as you know that many of the notices under GST are based upon and assessments are based upon what and how you disclose figures in GSTR 99C. At the same time, it is important to do a complete GST sanitization so that you are GST scrutiny ready. So first and foremost, the most important amendment which has been made without much noise by the GST network in the form GSTR 9. Earlier, table 8A of GSTR 9 would auto-populate the input tax credit from GSTR 2A, which was a dynamic changing figure. However, this time table 8A of GSTR 9 will be auto-populated from GSTR 2B, what you have filed in financial year 23-24. So, in case there is any invoice for which you have booked in the last year and invoice date is of last year, that is 23-24, but it has been auto-populated in GSTR 2B of April to October 2024. In such case, it would not reflect in table 8A of GSTR 9, and therefore it is very important how you file table 6, 7, 8, 13 of GSTR 9 and table 12 of GSTR 9C. So let us understand with 4 examples. First, in case say invoice date is March 24, you have received the goods or services and posted the transaction in your ERP in March 24 and you have availed the input tax credit also in March 24. In such case, all would be there in your GSTR 2B as well as GSTR 3B of financial year 23-24. The ITC credit would be auto-populated in table 6A and 8A of GSTR 9. You would disclose it in table 6B of GSTR 9, would be auto-populated in table 8B of GSTR 9, 8A and 8B would match, and therefore table 8D, which is by far the most critical table of GSTR 9, would be 0, completely matched. This transaction would reflect in table 12A of GSTR 9C and would be auto-populated in 7J also, and therefore table 812E of GSTR 9C would be completely matched. So this is an ideal scenario, no changes, absolutely perfect. However, second, say invoice date is March 24, you have received the goods or services in March 24, however, the invoice did not reflect in the 2B of March 24 and you have taken the input tax credit in April 24 and it reflected in the 2B of April 24. In such case, table 8A of GSTR 9 would not have this input tax credit, and in case as last year you take this input tax credit, that is invoice of last year, but availed in the current year April to October in table 8C. In such case, table 8D of GSTR 9 would become negative, so to say, and you all know in case table 8D of GSTR 9 is negative, it may result in a GST scrutiny or assessment by the department. Therefore, it may be a good call to take this input tax credit of invoices of last year availed in the current year in table 13 of GSTR 9. Therefore, there would be no negative figure in table 8D. However, please note that this figure may need to be reduced and disclosed in table 12C of GSTR 9C, because it would be a part of input tax credit as per your purchase register of financial year 23-24, with a note in GSTR 9C of the modus operandi which you have followed, so that even if assessment this transaction is picked up, you say that you have taken a judgmental call due to the change in auto population of table 8A of GSTR 9. Now, third transaction. Say for example, your invoice date is March 24. However, you have received the goods or services and posted the transaction in your ERP in April 24. And of course, you have availed the credit also in April 24. While this transaction would appear in table 8A of GSTR 9, however, this input tax credit would be an input tax credit of financial year 24-25 and would be taken in the next financial year. Therefore, this may be showing a excess ITC which is not availed in table 8D of GSTR 9. There is no other place to show this input tax credit because the goods or services have not been received as yet. To show this in table 8C or so to say table 13 may not be as per the instructions of GSTR 9. However, you may take a call to disclose this in table 13 based on the heading of the chapter of table 13 and the nomenclature of table 13. Whatever might be the call of disclosing or non-disclosing this transaction in table 13. However, it is our suggestion to show this as a statement note in GSTR 9C when you are filing the 9C, because in financial year 24-25 this figure would auto populate in your table 6B and may result in a negative 8D of financial year 24-25 GSTR 9. Therefore, it is very important to disclose this as a note in GSTR 9C on the call which you are taking. Now, the next important transaction is those invoices which are of financial year 22-23, but you have taken it in 23-24, and because in the last year financial year 22-23 table 8A of GSTR 9 which was being auto populated on GSTR 2A, that transaction you have taken in table 8C. Mind that till last year we were taking a call to disclose these transactions in table 8C of GSTR 9. In such case, this would lead to a negative table 8D, and therefore a note would be required to be given in GSTR 9C. Also, this transaction would need to be added back in table 12B of GSTR 9C, so that 12A and 12D are reconciled of GSTR 9C. So friends, these calls are very important in lieu of the change in table 8A of GSTR 9, as any negative figure in table 8D would lead to a scrutiny under GST, and that scrutiny could be an auto-generated scrutiny notice too. Therefore, one needs to be very careful. Another important call which you need to take is apropos Circular 170 of 2022. Many of the taxpayers did not implement this circular in toto in 22. However, in the last year, financial year 23-24, I am sure most of the taxpayers have implemented Circular 170 in totality. So, what happens with Circular 170? Say you have an input tax credit in March 2024 and you have an invoice of March 2024 and it is reflected in GSTR 2B of March 2024, or for that example any month in financial year 23-24. You take the input tax credit in table 4A5 being auto populated from GSTR 2B. However, if you have not received the goods or services, you show it as a temporary reversal in table 4B2 of GSTR 3B, and thereafter in the next month you reclaim it in table 4A5 of GSTR 3B while disclosing it in table 4D1 of GSTR 3B. So, this results in the same ITC being reflected twice in table 6A of GSTR 9. However, one part, that is the first availed part of input tax credit, you need to disclose it in table 6B, and the next reclaimed part you need to disclose it in table 6H of GSTR 9. And of course, the temporary reversal in 4B2 you need to disclose it in 7H of GSTR 9. So, your 7J is sacrosanct. However, this dual disclosure of ITC, same ITC, first in table 6B and then in table 6H, would lead to a double disclosure in table 8B, because 8B of GSTR 9 is auto populated from 6B plus 6H. This would again lead to a negative table 8D, which may lead to a auto GST scrutiny notice. Therefore, again it is our suggestion that a note may be disclosed in the GSTR 9C as to why table 8D is negative due to this anomaly, right. So, this note which you are disclosing in table 9C, one of the tables in 9C, this would lead to a considered view by the officer while doing the scrutiny based on a negative table 8D. So friends, this is the second important call which you need to take while filing GSTR 9C of 23-24. Now, few important points for GST sanitization. First, till the last year we have seen many show cause notices or ASMT 10 to reconcile GSTR 1 versus e-way bill. As the GST law matures, we may see going forward show cause notices for reconciling the purchase register with the inward e-way bill register. Why so? Because section 16(2)(b) of the CGST Act requires that input tax credit would be available only when goods are received. In case for any inward transaction in your purchase register, the e-way bill is not generated either by the recipient or by the supplier, it may mean non-receipt of goods, and therefore applying 16(2)(b) input tax credit may be denied. So it may be the right idea while you are filing the GSTR 99C to do a purchase register and inward e-way bill register reconciliation so as to be scrutiny ready for input tax credit for financial year 23-24. A major change has happened from 1st November 2024, and as I said that while filing 99C, it would be important to see all the major changes till the date you are filing 99C. So the major change from November 24 is the time of supply for RCM invoices. So for the purpose of RCM payment for services like transporter services, for unregistered transporters, directors fees, sponsorship, etc., etc., the time of supply till 31st of October 2024 was 60 days from the date of the invoice of the supplier. So in case the transporter's invoice date is 1st of February 2024, then within 60 days you should have paid the RCM and of course taken the credit if eligible. Otherwise, interest would require to be paid under 13(3). However, from 1st November 2024, this RCM payment along with the self invoice needs to be generated within 30 days, not from the date of the invoice of the supplier, say for example transporter, but the date of receipt of the services, which would be a little earlier even from the date of the invoice of the transporter or the service provider. Therefore, it is very important to change your processes and to see that this change is implemented. So at least, if not earlier, but at least from the date of invoice of the service provider under RCM, within 30 days, you as a recipient would require to generate self invoices under Rule 47 capital A and pay the RCM liability. Otherwise, interest would require to be charged at the rate of 18% per annum. Third important thing which you need to see is the impact of invoice management system. Now we all know that most of the taxpayers, as far as we understand, have not implemented IMS in November 2024 because it was not mandatory. However, in case your customer has implemented the IMS and rejected any of your credit notes, then you as a supplier has to pay the GST liability thereon in the month of December with interest. Therefore, while you are filing 99C, it would be a good idea to even sanitize this part, see the supplier's view of your IMS, and in case your customer has refused or rejected any of your GST credit note, then you must ensure that in the GSTR 3B of December, where you are filing, you have paid the GST liability along with interest. And last, many of the taxpayers have got show cause notices, and you need to now be very careful, because from 1st April 2024, input service distributor would be mandatory for multi-state registered taxpayers. Therefore, for financial year 23-24, you need to see that all your common ITC, say for example ITC for stat audit expenses, ITC for insurance taken for the country, all the states as a whole, and such other common ITC are not taken in the HO state but routed through ISD. Even if they are taken in the HO state, at least for 23-24, you need to see that they are cross-charged, and before 1st April 2025, you need to ensure that the process is streamlined and all such common credits are routed through input service distributors registration only. So friends, many changes are happening in GST, and this is the time you can do a sanitization, take the right calls while filing the 99C, so that you are assessment or GST scrutiny ready. Thank you very much for watching. Happy filing 99C. Please do like, share and subscribe to this channel. Thank you very much.